Hello traders, Jason here with SwingHigh.com. It is Tuesday, December 15th, 2009, and we have a very news-oriented day in the markets today. As you can see, well, I'll start with the news. This is the Bloomberg Economic Calendar. We have had 4 major reports come out so far: the Producer Price Index, the Empire State Manufacturing Survey, the Treasury International Capital Report, and the Industrial Production Report. Let's take a look at those individually. The Producer Price Index was better than expected as prices rose. The Manufacturing Survey was much worse than expected, down here at 2.55, but the consensus range was 15.6 to 27, meaning there was very, very slow growth in the manufacturing in New York. Treasury International Capital was much lower than last time by 20 billion. So I'm not really sure. Okay, sorry about that. I had to take a look at that for a second. Basically, that's the demand for long-term U.S. securities, meaning other countries buying our debt, definitely dropped. So that's not a good sign. And here we have industrial production picking up a little bit. So that's not necessarily an upward surprise, but it's in line with expectations. Look out at 1 o'clock. We have some housing data coming out, so be careful of that. Be sure to watch what that is, what happens there. I'm going to take a quick look at Yahoo Finance, which is often it gives you a quick overview of what's going on, and basically it's saying the stocks are fluctuating after inflation data. GM is going to repay its loans by the end of June, and stuff like that. Take a look at the Goldman same-store sales. They were a little better than last time, which is good. So we have a lot of mixed data out there, and that is leading for the markets to pretty much chop sideways, at least here on the S&P. We did have a gap down, but a nice strong recovery back through this resistance area at 111.50. Came up here, basically filled the gap, and then now we pulled back a little bit. That kind of resilience there were some negative news reports. At the same time, there were some positive news reports, but this market could have sold off hard, especially after being up a few days in a row, like it has. For 4 sessions in a row, it's been up. So it could have sold off, but it didn't. So that is a bullish sign, in my opinion. And right here we have a bull flag forming, and it looks like right now that bull flag could be breaking right now, meaning we could be breaking out to the upside. It's light. It's on a 5-minute chart, so it's not the most significant bull flag, but it is a bull flag nonetheless, and it is breaking out to the upside so far. We'll see if that holds. So the S&P down fractionally about 0.1%. The Dow, the diamonds, down also about 0.15%. The NASDAQ is up. It's basically flat at 0.02%. The Russells are really strong today, up 0.5%, while the financials are really weak today, down over 1%, down 1.11%. So that's interesting to see. The trend is definitely bearish, but I'm going to take a look at the trend Q because the trend has been, the trend Q is bullish. So the past couple of days we've seen a weird divergence in the trends, which just take note of that. The VIX is down slightly, 0.14%. Let's take a quick look at gold and the dollar. Gold is down 0.33%, and the dollar is up, 0.8%. Nice strength on the dollar. So that should provide for some downside to the markets. Let's see if they can hold up. If they do, that will be bullish. If not, that will be expected. Thanks for being a part of SwingHigh.com. I'll talk to you later.